CNBC-TV18, celebrating 15 years of leadership.
Welcome back. You're watching Crystal Ball. I have been in conversation with Samir Arora of Helios Capital. You spoke about the room for fiscal and monetary stimulus. I want to ask you what role you think monetary stimulus specifically will play in this economic upcycle that you're expecting in the next 2-3 quarters.
See, it won't play maybe for one more quarter because we have seen that the first cut, for example, was not even transferred to the borrower because the NPA situation is high, but it helps the bank then. So somebody is helped when there is a cut. Obviously, somebody loses, maybe a depositor, but we are talking from the borrower side. So in general, I would think, and I believe Dr. Raghuram Rajan said, I think yesterday or day before yesterday, that their model says that these things take 2 to 3 quarters and maybe 50 to 75 basis points cut when these things happen. But the point is that the market rates are already down and it is as much a signaling as anything else. But these things have to come together because simply when Dr. Raghuram Rajan cuts rates, it would also mean that he, who we believe is independent and a great academic and sort of a strong person, that he's also bought into whatever is the budget or otherwise steps of the government. So these all reinforce each other. Because if you believe separately that Dr. Raghuram Rajan is a good guy and he's independent and he says that I will cut rates when I believe that the fiscal problem is being controlled, when inflation is in check, then when he does cut it, then you should remember that this is what it implies. And therefore, these things are all reinforcements. The bottom line is, our valuations are not so high that somebody can say, I will not come in. Because you have to just believe one thing, that there will be higher earnings growth in future, either because of the fact that over time, corporate earnings as a percentage of GDP have been lower, or that there were many projects that were stuck and therefore margins were low, or that investments were blocked and therefore they were not productive, or that in general a saving in input costs, oil costs, material costs and interest costs will in any case, even with the same volume, help. So you have to believe that in a big picture sense, that if it doesn't happen in one quarter, it will happen in the next quarter, but that these things they can't disappear. They will have to benefit somebody somewhere down the line.
Let me come back to your 60% or 100% long and 40% short portfolio. Which clusters have you chosen your shorts from, other than public sector banks?
Our shorts are across, we are much more, focused on the longs. On the shorts, we are much more democratic. We even have consumer shorts. We have material shorts, many state-owned companies short, many oil producer short, many things are short. Because in the short, the thing is, what we are not long, if we can get our longs right, broadly we get our shorts right because we are playing the difference. So we will do badly for a few months here and there if suddenly there is a turnaround in sentiment towards commodity companies, towards leveraged companies, and also towards state-owned companies. And if that happens, it's not that we say that on the short side we will be holding them forever. Although broadly we've kept many, we're even real estate short in one or two. In general, on the short side we're more nimble, but because it's sufficiently diversified even on the short side, we'll have maybe 17, 18 names for a 40%. It works. Last year we made money in absolute on the short side. Absolute. In a very massively up market. Because there were many sectors, sector companies that got stuck because of coal allocations or which got into some controversy. There were many ideas. And those weights then we change if an event happens. Otherwise, broadly we don't like this group. And even if it goes up, we don't care. Our long should go up more than that and we'll be all right.
So the long part of your portfolio, you already said that you're very bullish on banks. Which of the other economy clusters focused on the domestic economy are you most bullish on, between say an auto or consumer focused companies or infrastructure companies?
We have auto and consumer and infra, and in auto we have auto ancillaries and we have all these normal 3-4 big names, and because we had the big daddy, the stock which is up some 40 times for us in 3-4 years, that we have, which is EICHER. So, we have a few here and there. We also had in INFRA, we have the port guys, the private port guys. We have we have basically a few rail-oriented. Those are the ones which we consider as good companies in bad sector. So, in general, infra does not mean to buy the most leveraged guys and praying for Middle East to turn around. Those kind of things we don't need. But there are many where you can logically bet, not they fail, But today, if today we believe, or anybody believes, that the government has a lot of room to disappoint in the budget, I think that would be wrong. It doesn't have room to disappoint because it has flexibility, it has a low oil price, they have increased 4 times the taxes on oil, so they have increased improved their fiscal. And so I would think it will be difficult to disappoint unless you say my expectations were super high and I wanted Nariga to be scrapped and I wanted this to happen or some shit like that. But in a big picture sense, you can for a day or two here or there say that it was overdone before the budget, but broadly they cannot disappoint. They can be a little bit less than what you think, and that would take 3-5 days or 10 days to sort out.
So you think the trigger for a meaningful correction, if it happens sometimes in the next few months, by meaningful I mean at least 8-10%, it's more likely the stimulus comes from outside India rather than something domestic like the budget?
Yeah, because I think, let me see what I should tell you what I think should be done in the budget, which anyway they're also signaling. The thing is that right now, next year, we have room to spend or step up public spending for the government to spend more. The government, if this year they have said 4.1, so whatever way they will achieve 4.1, there is no need. And this 4.1 I think is unfair because they should not have accepted this in the first place. They should have blamed it on poor accounting, this, that, and said it will be 4.5, but anyway, they accepted 4.1. Now, next year, there is no need to demonstrate to the world even more fiscal conservativeness and say we'll be 3.6 or something, which is what Mr. Chidambaram had said. Make it 3.8, 3.9, because people know that now you have room, so you don't have to actually demonstrate it. It's like a normal banker-borrower relationship. If the bank believes that you have money, you don't have to demonstrate it. You don't have to show your bank account. You say, yeah, I know you have it. So the government should spend money on public spending because we know that private sector does not have in sectors like railway first, road, housing, anything where we know that the private sector is stretched. And then pay out also all the people whose money is stuck, contractors, all these road guys, take over whatever project they can't take over, throw them out. Take these things over, spend your own money. And that is what is needed. And I think that can be easily done and most probably will be done. So it's not something that I dreamt of it. It makes logical sense and they've been sending out signals like that and I think it'll be done.
What's the global situation like, Samir? Do you worry about it or you think we'll amble through this kind of a global slowdown period that everybody is going through?
Well, in global, the problem is that in 2008, we used to think that we are better and so we don't care about the world. Nowadays, we care. So if the world goes down 10 days in a row, we will react. Or 5 days in a row, and we can connect it to some logic, even if it is nothing to do with us. It's only their logic, only in their market. We may still be willing to connect. But those things are very difficult to preempt. Because, we have seen that they don't know anything. You've seen John Paulson make 500% by buying options in 2008 and then losing 65% since then. So we know that nobody knows anything. And for me to sit here and preempt. But this time I will react, unlike in 8. So that 8 we made a mistake in not reacting by saying we are an island of stability and all that. Now we will not do that beyond a point. But today is very difficult for us to preempt things. There have been at least 10 scares in the last 5 years, and after 5 days they disappeared. So we say, okay, we'll see either a 8-10% fall in the world or a 5-10 day or a real credible connect that we can do about a breaking event with some market thing. Otherwise, we can't preempt. That's the basic thing.
Where does that make you stand with your view on exporters like IT or even pharmaceuticals?
We don't have much in IT. We have only now around 10% in 2 stocks. And at the peak, at the end of 13, we may have had 20% in 4 stocks. So right now you can say that we are not, because at the end of the day, the currency has done its bit. So this year it should have demonstrated some higher, even rupee growth. So today I don't consider them as primary rupee beneficiary, because I don't think the rupee is depreciating much, against dollar at least.
Samir, always good talking to you. Thank you very much for your time today.
CNBC-TV18, celebrating 15 years of leadership.